Good morning, everybody. This is Bob Iacchino and Mike Arnold, co-founders of Pat Trading Partners. It is April 6th. This is your AM Pat Chat covering the FX markets. Mario Draghi yesterday said that inflation in the euro area is not strong enough for a shift to tighter monetary policy. You saw the euro weaken a little bit on that, but it's since recovered a little bit of it, which Mike will talk about. We had the largest intraday flip in the Dow and S&P in 14 months, from high to low, from being up on the day to being down on the day. All of that after the Fed minutes yesterday, which showed that the Fed is ready to begin reducing the size of their $4.5 trillion balance sheet. In yesterday's afternoon Pat Chat, I said it was a $2 trillion plus balance sheet. It is $4.5 trillion, and they're going to start to reduce it later this year. That should raise interest rates a little bit. The yields went up. You're going to see yield differentials between the countries start to change dramatically if they actually do that. And that is obviously one of the main factors in the way things are affected in the FX markets is interest rate differentials. Today we've got Trump and President Xi at Mar-a-Lago. So I'm hoping we see some things come out of there that are positive. German factory orders yesterday, 4.6. That's up 4.6 versus an expectation of 3.9. We also had market construction PMI for Germany, 56.4 versus 54.1 last. Initial jobless claims in the US this morning. And then we've got the Australian dollar performance construction index tonight at 6:30 Central, 7:30 Eastern time. That is about it of note. I'm going to turn it over to Mike to let you know what he's seeing on the charts.
Okay, thank you very much, Bob. Many things are range bound right now. Probably aren't going to move much unless something surprises the market today, because we have non-farm payrolls tomorrow, which will probably cause most of these to get out of this range. You can see here in the euro, it's been in this really tight range, slightly expanded to the downside, but it's been in this tight range all week. So going to be watching really for a move up above the 106.89. If we get above there, we have the declining rotation zone right in the middle. There's a GAN cluster right around 106.98, 107 area. If it gets through 107.05, next level's up 107.32, followed by 107.51, followed by 107.67. And then on a very big move, we're looking to go possibly up to the next major significant level at 107.89. Conversely, if we break below today's lows, which currently are 106.29, we have a significant level right around 106.21. And if that's broken, we're looking to go down to 105.94. Then we have a rising trend line. And if we go through that, 105.59, then 105.46. Pound, it's been in this range for the past couple of days, still in there. Tested really the 125 level, 124.96, 125 level up here, and found support right around the 124.20 to 25 level down here. So if we get above this 125 level, watch for 125.16, 125.25, then we could return to this major cluster up here, which would be 125.54, and the declining 200, which is 125.63. If it breaks out of this range to the downside, especially below the 50, which comes in at 124.17, watch for 124.06. Below that, we have significant level 123.87. Then we have this pivot low, which we're still in a potential double top at 123.76. And if that's broken, watch for 123.46, then 123.38. And the full target on that double top, we're actually looking for a single target trade if that were to trigger of 121.96. But that would have to be a close below that point. Japanese yen, this key level right around the 110.15 area has been holding. If we get below that, watch for 109.45. Then we have a rising 200, 109.29. If that's broken, 108.77. If we rally, we've so far tested the declining rotation zone, 110.98, so really the 111. If we get through that, we have this trend line about 111.19, a key point right here, which is 111.45. And then if we rally back through that, we have a Gann level, a prior target level, and declining 21 right around 111.65. Once that's broken, 112.13, and that could trigger a potential double bottom here, which then we'd have a substantial move to the upside for the yen, which would be the yen weakening, the dollar strengthening. Swissy keeps getting rejected, pushed higher twice above these levels, tested yesterday the 10076 level we talked about and fell back down to this very critical area. Today, tried to rally up above this trend line again, fell back down. Right now, if we continue lower, pretty significant support about 10012 and the rising eights coming in. If we get below that, 99.99 is below that, and then 99.88. Those are the key levels we'll be watching for. If we get above this high right here, 10078, we're then watching for the trend line coming in right around 10088, followed by 10097, which is essentially the 101 level. Those we'll be watching for. In the Swissy, Aussie tried to break below the flat 200 and the 75% gain level a couple times, got down, dipped towards our next level at the 75.28, didn't quite get there to snap back above the 75.58 level. This is proven to be very key level. If we do get back down below that, watch for a retest of today's lows, which are at 75.32. Then we have this Gann cluster, 75.23 to 75.28. And if that's broken, watch for a retest of 74.93. These levels I'm calling out are not just for today. They are for also tomorrow morning when we'll probably get the bigger moves. On a rally, 75.88, 75.93 is going to be key. We have a rolling over, declining rotation zone. So right, the upper 75s to 76 level, lots of resistance. Then if that's broken, watching to get to 76.20, then possibly 76.50 right up in here. CAD, we have a redrawn trend line on the upside. This is proven to be a very key level right around this new defining point, which is 134.55. We didn't quite get there today, got rejected off this trend line. If we rally back up, watch for a retest of the 134.55, then above that, 134.64. Then if we have a big move in the Canadian dollar, watching us to possibly return to the 135 to 135.06 area. If we head lower, key support 133.93, followed by the rising rotation zone 133.88. And then at the bottom of that, we're looking at 133.62 and 133.65, where we have a Gann level and the rising rotation zone, the bottom half of it. Finally, on the peso, you can see also caught in this area. 8 has flattened out, 21 still declining, so we do have downward pressure still. If we rally up, 1898.49, followed by the 1902.77. And if that's broken, watch for about 1908.24, followed by 1912.82. If it heads back down lower, I have to adjust this real quick. If it heads back down lower, watch for key support right around the 1864.34, followed by 1861.29. And we have a lot of key support in here. And then all the way down to 1854.27. Then if that's broken, watch for a retest of this area all the way over here, which would be around the 1830.68. That's all we have for you. Back to you, Bob.
Thank you, Michael. As Mike mentioned, non-farm payrolls is tomorrow. The beat that we saw in the ADP payrolls, which I had put as an addendum in yesterday morning's Path Chat, has not bumped up the non-farm payroll estimates for tomorrow yet. We're still expecting 177,000 versus 235,000 last. I think more important for tomorrow will be the change in the labor force participation rate, the average hourly earnings, more specifically, and the average hourly work week. Watch for those things, because if we see those ramp up, worst case scenario, we underperform on the change in non-farm payrolls and outperform on the average hourly earnings and the average weekly hours worked. If that happens, look for the dollar to strengthen and look for equities to sell off, because that will trigger the Fed, as I mentioned. All right, we won't have a patch it out tomorrow morning. That's why I put this in here at the end. We will probably do one this afternoon, though, and we will be recording the podcast tomorrow where we'll go into most of this stuff in depth. Thanks for watching, and we'll talk to you guys soon.